the mining and exploration end of the gold, silver, and copper are all still peaking, meaning moving higher. And the ones that have not moved up till now are finally starting to show that there's daylight ahead for them. It's not cheap anymore, but the reasons that drove gold here, which we could discuss, are still very valiant. And that's why I think after an inevitable correction, there's still a lot higher prices to go on the gold market.
Gold prices have demonstrated remarkable resilience, trading above $3,300 after briefly dipping to the $3,274 to $3,275 range. This recovery comes amid escalating geopolitical tensions, particularly from the ongoing Russia-Ukraine conflict, which continues to drive investors towards safe haven assets. PeterGrandich, a veteran Wall Street analyst respected for his market insights, emphasizes gold's enduring value proposition. He highlights gold's long history of preserving purchasing power, unlike the US dollar, which has steadily lost value over time. Despite recent pullbacks, he advises investors to focus on the long term. The outlook for gold remains firmly bullish, with analysts projecting targets of $3,265 by 2025, approximately $3,805 by 2026, and a potential peak of $5,155 by 2030. While intermittent periods of weakness and price pullbacks are expected, the long-term trend appears decidedly upward. A key factor supporting these bullish projections is inflation, which Grandich argues is significantly higher than official statistics indicate. Essential expenses, including insurance, housing, food, and transportation, have risen much more dramatically than reported figures suggest. This perspective finds support in recent economic data, which shows that U.S. inflation climbed to a 6-month high of 3% in January, an unexpected increase since the beginning of the Trump administration. While much of this is attributed to inherited economic conditions, experts warn that current policies such as trade tariffs, tax cuts, and pressure for lower interest rates could worsen inflationary pressures. Grandich concludes that the mining and exploration sectors for gold, silver, and copper are all showing strength, with previously lagging stocks now beginning to move higher and signal brighter prospects ahead. Silver has shown significant price gains, indicating potential outperformance over gold. Its dual role as a precious metal and industrial commodity, driven by rising demand for solar panels and reflationary trends, supports its outlook. While central bank gold purchases influence both metals, this could be a more immediate catalyst for silver's rise if market expectations favor silver in the near term. Before we begin, don't forget to subscribe, hit the bell icon for updates, and share this with friends who might find it useful.
The argument for the dollar is also hurting if you're going to cash because of how it could deteriorate more. Now, of course, for us, gold is priced in dollars, but for others that are in other countries using those currencies, they've seen some good gains on the currency exchange. I wouldn't play it for a currency exchange. You know, I think people don't recognize how much more inflation is than what the government tells us. No, I shouldn't say it. Let me correct it. I think people do realize they're just upset that the government doesn't demonstrate that. There's no way that inflation is just going up 0.2 or 0.3 or 1% a year. Wherever you live, I don't care what it is, anything to do with household, insurance, car-related, home-related, clothing, food, business expenses. We're getting a 20% raise in our electrical rates here in New Jersey next month. And so I think the other argument that you have to keep in the back of your mind is the great purchasing power that gold has demonstrated. It still buys today what you needed to buy 100 years ago, 500 years ago, 1,000. You can't say that about any currency, especially the dollar. So don't lose sight of that. We all got caught up because we've had this really implosion. But why did we have the implosion, Elijah? Why has gold done what it's done? I think we've discussed that, and I think we're going to pretty well see more of that play out in front of our eyes over the next 12 to 24 months. We do know now that many of the producers now are, we like to say, printing cash because their free cash flow from the difference of what their cost is to bring out an ounce of gold and what they're able to sell it for is just at record levels. And this free cash flow is just dramatically increasing at a time when many other industries are seeing flat to down earnings. And that is attracting the generalists. The people that normally don't play gold stocks are now coming to that market. But what people should take take notice, and it's the first time, in fact, just before you and I went on, I put a few of the charts up on my own X page on how the little junior players, the highest risk, but nevertheless the ones most leveraged to higher metal prices, are breaking out. Charts are finally, after many years of bearish patterns, are moving and showing. We've even noticed the accumulation. Even when gold had its little corrective phase the last 2 weeks, those stocks used to just fall out of bed. Not only didn't fall out, some of them went up. So the mining and exploration end of the gold, silver, and copper are all still peaking, meaning moving higher. And the ones that have not moved up till now are finally starting to show that there's daylight ahead for them.
Gold's remarkable ascent continued in early 2025, crossing the significant psychological threshold of $3,000 per ounce and establishing a new all-time high. While this milestone has captured headlines, market veterans like PeterGrandich emphasize that the more profound narrative lies in gold's consistent performance over the past quarter century. Since 2000, gold has quietly but decisively outperformed traditional investment vehicles, including stocks, bonds, the US dollar, and even real estate in many markets. Grandich highlights the significant gains for those who have recently purchased physical bullion. Although gold is no longer a bargain, he believes the factors driving its rise remain strong. After an expected correction, he forecasts gold prices will continue to climb. Market analysts observe a significant shift in what drives gold prices today compared to previous decades. Current price movements are increasingly determined by physical flows and central bank demand rather than investor reactions to macroeconomic indicators. This represents a fundamental change in market dynamics, with institutional buying providing a more stable foundation for gold's value proposition. Let's get back to the interview.
There's a lot of things that are important there. And of course, on the gold market, I guess the people that are still not pleased with the move in gold are people like me that own a lot of junior resource stocks that haven't participated. Because if they're clients like yours that just bought bullion a few years ago, they should have you down for a special Christmas present this year, or at least got one this past year, because it's been a phenomenal move. It has outperformed stocks and bonds for 25 years. And so give credit to those that have gone to the physical market. And quite frankly, it's not cheap anymore, but the reasons that drove gold here, which we could discuss, are still very valiant. And that's why I think after an inevitable correction, there's still a lot higher prices to go on the gold market. So I really think one of the attitudes people should take, Elijah, is it's not how much you make, it's how much you don't lose, which is going to separate the winners from losers going forward here. And that preservation of capital now is more important than capital appreciation. And of course, people can remember that's what gold's primary purpose was. It's been great that it's been a great capital appreciation tool, especially in the last 18 months, especially for me, for someone that got out of stocks and bonds in 2021 and bet on gold going up a lot. But let's not lose sight of what gold's historic and main purpose should be. I'm singing to the choir, obviously, but and that I think is a more appropriate time for people. And let me throw in something. If you were going to get to it, I'm sorry to hop over. But for the first time in probably a generation, maybe my entire career, I now view silver in the same breath as gold. And so I think when we do talk about metals, we need to talk about owning gold and silver now. When it used to be for me, I used to get, like I said, people got mad when I said silver was like kissing your sister. But I do think it's worthy now and something that we should talk about.
And that's because of the dramatic gold-silver ratio above 100-1 at the moment?
Yeah, that's the first purpose. But the second purpose is, in some people's eyes, this is the first purpose because it's manipulated, it's clear, blah, blah, blah. Every time it gets to where we said that about gold 20 years ago, not just me. There was a group, Gatter and others. We were outspoken and we were called tinfoil hat people and all. Well, it clearly came shown that it was being manipulated. Eventually, a lot of people were charged. A lot of people pleaded guilty. I think the same has been going on in the silver market. Of course, I'm not alone in that. I don't think it's the only excuse or just an excuse, but I think it's a purpose. But what's changed in the silver market from 10 or 20 or 30 years ago is a much better bullish fundamental argument for it, just on usage itself. And if we get that kick into people starting to own silver like they want to own gold, that'll really make that dynamic of supply versus demand quite bullish, get us through that resistance area. And then it's, it would not surprise me then, not yet now, but then that it even outperforms gold to the upside.
Gold and silver continue to demonstrate resilience in the face of economic uncertainties, with strong fundamentals supporting their upward momentum. While both metals are benefiting from growing demand, silver's dual role as both a precious and industrial metal positions it for potential outperformance. Despite recent market corrections, the long-term outlook for both metals remains positive, driven by factors such as inflation hedging, industrial uses, and central bank purchases. Will gold and silver continue their rise, or is a correction ahead? Let us know your thoughts in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for watching.